Hey everybody, Economic Ninja here. I hope you're doing great. I'm in front of our local Kohl's store, and there's some information coming out pretty soon that's going to hit the streets. And why is it so important? I'm going to tell you why. Kohl's represents the middle class and clothing sector. The clothing sector is very important. Why? Because it is a necessity. Now, is all clothing a necessity? Absolutely not. We see luxury brands and things like that that people do not need to go out and buy, right? But when it comes to Kohl's, Kohl's seems to have that discount clothing line sort of thing nailed, right? Uh, as opposed to like Ross, when Ross is that discount, much more discounted brand, this is discount, but it seems to be like a little bit above, cut above the rest. Now, I know everyone's got their opinions, but I think by and large, Kohl's does represent the average family's clothing styles or, their price range. And why I think it's so important is because coming up soon, analysts are estimating that Kohl's is about to report a decline in sales. And that's a very important thing. See, because when we are judging the health of the consumer, it's one thing to be able to show, oh, hey, look, discretionary spending is dropping. People are no longer buying things they don't necessarily need, right? Like that big screen TV or that set of golf clubs. But when they start to, it actually starts to affect and hit the average consumer's needs, right? Where they start to contract in their spending when it comes to clothing, right? Like I said, first thing to go is luxury goods, is luxury clothing. But then when it starts to hit the normal priced, right? The lower price tiers of clothing, now you know the consumer is really, really slowing down. Now you can see behind me, and I know it's backwards. I can't get my camera to turn around, but you could see that it's Kohl's plus Sephora. Now this is a new change, and we're going to talk about this in this news story. This just hit this. This sign was just added approximately about a month ago. So this is all new to Kohl's, and it's their way of trying to grasp at straws to try and bring in more business because they're already starting to see that dip in sales. All right. So this is out of Seeking Alpha, and it's entitled Kohl's Key Data Points Just Ahead. It says here, today we take a deeper look at well-known retailer Kohl's. After a pullback, the stock trades for less than a buyout offer that was rejected by previous management. With a new CEO on board, a huge dividend yield, and recent insider buying, the company popped up on our radar for further research analysis as analysts follows below. So it says here, company overview. Kohl's Corporation is a Menominee Falls, Wisconsin based omni-channel retailer selling moderately priced private and national branded apparel, footwear, accessories, beauty and home products out of literally 1,170 properties in 49 states and online. So Kohl's is massive, stretches very far. It says here, the shares of the retailer had fallen by 2/3 in the past 12 months after a $60 a share takeout bid was rejected. I bet you right now there's some management out there that are wishing that they would have taken that deal. It says most of the downward move was a function of lower foot traffic at its properties, resulting in a fiscal year 2022 financial performance that could accurately be dubbed as an unmitigated disaster. With a Sephora store in-store concept now populating more than half of its locations and a 10.5% dividend yield. Let me stop there real quick and say, that's a big percentage, right? Return on your money when it stocks. Why would you need to do that? Sometimes, well, I'll tell you, more than likely, it's to be able to, first off, retain shareholders and attract new ones, right? Now, I've talked about this before where dividend yields exploded following the 2008 recession. Why? Well, with large blue chip companies that were giving a dividend prior to that, they never stopped giving their dividend. They were still bringing in sales. One that comes, or the sector that comes to mind is the oil and gas industry. Any of those companies that were still giving out a dividend, they kept giving it. But as their share price fell, because traders were selling their stocks because a recession was now full-blown in your face, as the share price sold off, the dividend yield exploded. Well, in a lot of other cases, and let's give Kohl's as an example, there are companies that want to go out and give that big dividend yield to be able to keep hold of shareholders because they do not want them selling off that stock. As that stock drops, that percentage of rate of return, if they keep the dollar amount the same based off of current sales, it gets much higher. So right now, Kohl's at 10%. There's going to be a lot of people that are really interested in it, right? The problem is if they keep coming out with bad retail numbers and forecasts that are looking really bad for the retailer, you're going to see that stock drop even further. Now it says here, the recent insider buying by the CEO merited a deeper dive. Really interesting that they would say that. First quarter results will be out this week. A full investment analysis follows in the paragraphs below, but that's a lot of deep stuff. We won't get into it. And then looking for, so I'm not even going to get into that. So look, my point being is this. There are a lot of analysts that are right now weighing in on their thoughts on Kohl's and the entire store's brand and where it sits right now. And they're saying that sales are going to be coming out weaker. And I believe that that is the case. Why? Because the consumer has contracted to a point now because the news is out there, right? When I was out there talking about this downturn a couple of years ago, the consumer would have laughed. Now, the average person I talk to, or even people that used to not believe me or not, understand any of this stuff, are saying the exact same thing. Something is wrong. I get it. I don't know what it is, but it doesn't feel right. Something's changed. And I believe you're going to see more and more companies like Kohl coming out with disappointing earnings. And this is a big deal because this hits the heart of America. This hits the heart of the middle class. And when you're talking about the middle class now, literally pulling back and not spending on things like clothing as much as they would, and this is not high priced clothing, then you know you got a problem. All right, guys, that being said, I thank you so much for watching. Guys, I'm gonna put a link below to the Silver Symposium. I'm speaking out in Las Vegas. I'm also gonna put a link to the Silver giveaway down below that runs into for like 4 more days. All right, guys, that being said, the Economic Ninja is out.